UK inflation dips to 2.3%, below expectations, dampening rate cut hopes. The United Kingdom's inflation rate saw a modest decline to 2.3% in April, marking its lowest level in nearly 3 years. However, the drop fell short of analysts' forecasts, casting doubt on the prospects of an imminent reduction in interest rates by the Bank of England, BoE. Financial experts had anticipated a drop to 2.1% in the annual increase of consumer goods and services, fueling expectations of a 0.25 percentage point rate cut from the current 5.25% as early as next month. However, the smaller-than-expected decline has tempered these predictions, with the probability of a reduction in August also being reassessed. The easing of energy and food costs has driven the decline in the Consumer Prices Index, CPI, last month, which had stood at 3.2% in March. The last time inflation was lower was in July 2021. Despite the overall decline, there are indications of continued pressure on household budgets and a reluctance to invest in big-ticket purchases. Furniture retailers, for instance, implemented a 0.9% price reduction between March and April, contributing to a broader 0.8% decrease in the cost of all goods. Yael Selfin, chief economist at KPMG UK, suggested that the likelihood of an interest rate cut as early as next month may have diminished. Falling inflation closes in on the Bank of England's target but may not be enough to sway an early rate cut, she observed. Services inflation, which primarily reflects the costs businesses charge each other, experienced a 6% increase. Inflation remained persistently high throughout much of last year, largely due to a rapid rise in import prices. The Office for National Statistics, ONS, noted that a rise in petrol and diesel prices in the past month prevented inflation from decelerating further, despite the recent stabilization of Brent crude prices around $83 per barrel. Paula Bejarano Carbo, an economist at the National Institute of Economic and Social Research, NIESR, highlighted that core inflation remained elevated at 3.9%, above its historical average. This, she emphasized, would need to fall before the BoE's Monetary Policy Committee, MPC, would consider loosening monetary policy. Paired with last week's strong wage growth data, we believe that elevated services inflation will remain an upwards risk to inflationary pressures in the second half of this year, Carbo stated. As a result, the MPC may exert caution at its upcoming meeting and hold interest rates, despite today's encouraging fall in the headline rate. Meanwhile, the Eurozone's 20-member bloc experienced a 2.4% increase in prices during April, remaining unchanged from the previous month.